Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the TGI Friday. Thank God it's Friday, the 27th of May. Bull versus Bear webinar here with Steve Miley on the call for trade day. Welcome, everyone. We're going to go through our usual regular run through. We're going to take a look at calendar, what we've had, what we've got coming up. The articles from the major news wires, from Bloomberg, from Reuters, and looking at what's going on right now from a macroeconomic, fundamental, and geopolitical perspective. And we'll take a look at some charts, what's going on the charts. Right, let's take a kick off with the calendar in here. Bullard speaking. Bullard is due to speak actually in the next few minutes in here. Maybe this is actually speaking now, I think, actually. I think this is just needs a quick refresh. Oh, no, I've lost this here. 1 second, I need to re-sign in. Let's just kick me out. As I just refresh the page there, now it's going to take me to the trading room and I'm going to get feedback unless I click this quickly. Be able to hear myself. Oh, no, there we go. So, so it says 3 minutes. I'm not sure whether Denny's speaking at 35 minutes past the hour, 7:35 Eastern, but nevertheless. So, Bullard's due to speak. We do have the PCE data. This is going to be the main focus really of the day. It's not massive data, but nevertheless, the Fed do tell us this is their preferred measure of inflation, even though markets don't look at it as much as they do at CPI. But the Fed do watch this. So PCI, the PCE price index, we get the month-on-month, year-on-year data coming out in just under 1 hour's time at 8:30 Eastern time. And then we get also get Michigan consumer sentiment data. And still can move markets in here. That comes at 10 o'clock Eastern today. So we're certainly watching for those as we go through the day. Let's take a look at the 5 things to start your day from Bloomberg in here. So a little bit about here, US-China tensions regarding Taiwan. Not really, and there's not much in here actually today. What's bad for crypto is good for Bitcoin, it seems. And so, again, we're not really focusing too much on Bitcoin. They kind of had... the cryptocurrencies kind of, if anything, they're kind of where at the moment got a positive correlation with stock indices, but not really driving those stock indices. So we're certainly not really keeping too much of an eye on what's going on in crypto. Record volume of Russian oil is aboard tankers. Again, none of this in here. Workers revolt in China and Apple in here. Apple suppliers, sorry, not Apple itself, Apple suppliers in Shanghai. It's all very light in here. Nothing really of significance in here. The big, obviously, moves we saw were yesterday's strong rally that we saw yesterday, and then following through into the futures market this morning. Dip buyers return to the market. Nothing more than that is really. I think it's kind of a little bit of a relief rally that we saw in the aftermath of Wednesday's Fed minutes that shows that the Fed are willing to do whatever needs to be necessary. Yes, they're willing to be more hawkish if they need to be, and equally they're willing to be less hawkish if they need to be. Chinese shares jumped overnight in here, but it was really the tech sector that led markets back higher in here yesterday, and that was the big driver. So global equity funds saw their biggest inflows in 10 weeks. And so, we've had this kind of definitely a shift to a more of a bullish risk on theme over the past 24, 48 hours. European stocks gain set for best weekly bounce since mid-March. Some positives on the weeklies in charts in there. Wall Street jumps on retail outlook hikes, ebbing Fed fears. So this was one of the drivers as well. We had Macy's in here. Stocks climb after raising its outlook in here. So that was certainly helped markets higher in here over the past 24 hours in here. And then in here, let's just take 5 video. Don't know why I've got that one open in here. Morning bid from Reuters in here. Again, the video in here, basically pointing out upbeat outlook in here for both US, European and world shares climb. Dollar falls on relief over Fed's flexible stance, and this is what I mentioned there. So more of a flexibility from the Fed from their minutes on Wednesday. If we look at where we're at today, so nothing really to add in here to what we've seen recently, really. The market's now, it was a really strong technical base that we put in yesterday. We took out some important resistances. We weren't on the call yesterday to highlight those, but unfortunately we couldn't make that call. Yeah, markets still looking very, very positive in here. European markets, you can see up between 0.5% and 1% higher in here this morning. And if we take a look at US, obviously surging higher yesterday. Nasdaq, I think, was 3% at the end yesterday. S&P close to 2%. Dow Jones 1.6% there. And this morning higher again, being led by the Nasdaq, about 0.5% higher. The other Dow and the S&P 0.1 and 0.3% higher so far this morning. Let's take a look at some charts in here. So there's nothing really much more to add into, apart from we've got this strong technical base going in. So if we first of all take a look at the US equity indices in here, you can see the market shooting higher yesterday. Importantly, we'd already taken out this peak in here on the S&P, and I'll come to the important level on the Nasdaq in a minute. We'd already taken that peak out back here on Wednesday, and then reinforcing that on Thursday, and now really importantly close to these highs here, and then you've got this impulse high in here from back in the middle of May. So the high there is 40.95. So it's going to be the big level to get through, and this impulse high is 40.99. So 40.95, 40.99, back through 4100, and this looks like a much more secure base. This is effectively, I'm going to call this a double bottom. I know you've got this bigger extension in here, but you can see these red candlesticks, these rejection candlesticks in here. Remember, we had all these hammer candlesticks. Hammer, hammer. This one's here. It's a dragonfly doji. Another dragonfly doji in here in there as well. So all of these very, very bullish candlesticks. And you can see the lows in here, here, on the red ones, all around the same level in here. We did get that spike lower back on the 20th of May. But besides that, we've kind of held that kind of area here, 38.70 to 38.50 apart from that spike. I'm calling this a double bottom in here if it takes out that high being 40.95 through that impulse high there where we had that big sell. That was the target. Remember, that was the target day and when Target announced, and then all retailers, we had bad retailer numbers, and the market saw that as a real negative for potential recessionary pressures. Up through there is a real positive for the S&P 500 today. Let's step into the 15-minute chart, and you can see the market. We spoke as well about this. If it's not a double bottom, it's certainly an inverse head and shoulders down here. On the daily, it looks like a double bottom. Here, it looks like the inverse head and shoulders. Remember, we had this weird upward sloping neckline on that head and shoulders. Well, look, boom, we took it out yesterday. And look, kind of trying to use the old neckline in here. This neckline to this inverse head and shoulders, this upward sloping neckline, trying to use that as support in here now. So, bouncing, kind of trying to bounce off of that old neckline in here. And look, and just made a new high in here in the last hour or so. And then we have dipped back lower. Maybe this dip back lower in here that we're seeing right now, buy opportunity in here. Looking for, if it starts to swing back higher here in the 15-minute chart, certainly jumping on longs in here. I think the Nasdaq's actually more, Nasdaq led the way higher. Nasdaq hadn't, up until yesterday, taken out these highs here. So you see through these highs here, that high there was 12.09675. Through there, secured a small base for the Nasdaq. Now this peak up here, this acceleration peak, that was a target day again, up at 12.594. That's still some ways off for the Nasdaq. Potentially not going to make that. It could make it today. A day like yesterday, it's going to be taking out these highs. But should the S&P, just switching back to the daily on the S&P could take this out. If it takes out that high, we get technical buying coming in. We get some shorts getting squeezed out. We're going to get probably longer term funds coming back into the market, fast money coming into the market on the long side, and we could easily see an acceleration higher in here from the S&P if it takes out this high, and then that in turn could help the Nasdaq to push up towards. At that point, the Nasdaq probably won't be up at this high, but then it could be pushed for the Nasdaq up towards this high, and then potentially get a threat to there. Let's step in on the Nasdaq onto the 15-minute chart, and really positive in here. You've got this again. Look, we met this more. You've got again this kind of inverse head and shoulders pattern. Then you get this other pattern building over here. So not a classic inverse head and shoulders, but nevertheless, you've got this kind of horizontal kind of line in here, and we wiped through that yesterday. It certainly secures this as a base pattern, whatever you want to call this down here, whether it's a double bottom, triple bottom, quadruple bottom, inverse head and shoulders, whatever it is, it's a basing pattern. And then the market hasn't even dipped down anywhere near to, you'd say this is the acceleration point through here. It hasn't come back and had a look at that. This is what I would class as high level consolidation, hardly even a dip. Just from yesterday's acceleration, if we go and put the Fibonacci just on yesterday's acceleration higher, just on this move here, okay? And you can see the market's only just dipped below the 23.6. It's pretty much held at the 23.6. That's the highest retracement level. So the fact that it's holding even above the most minor, the first retracement level shows that this is a high level resilient consolidation. And we're getting this little bit dip lower. I think this is a buy opportunity going into, remember, we've got the data now in just under 50 minutes time. And then we've got the cash market open a little later after that in here. So just under 2 hours time. But then I really think either through the data, through the PCE data, or through the cash market open, there's a buy opportunity in here. Any kind of swing back higher on here on the short-term chart, and on the 15 in here, and we're holding even this little minor support in here on the Nasdaq just here. Look, so whilst it's holding here, this looks bullish to me and a real opportunity. I think potentially for another day. I think we're getting a little bit of FOMO coming in. FOMO of the base has gone in. Is the base in? Is the Nasdaq base in here? Is that the base gone in here? Is the S&P not only putting in the base here, but if it takes out this, then it's a much bigger base on the S&P 500. Fear of missing out. Are we going to get buyers, dip buyers coming in, longer term money coming in, fast money coming in, looking for the next leg to be to the upside in here. Let's go take a look now at the commodity markets. So in here, going to kick off with gold. Gold in here is slightly hesitant, and it was a bit of a sell-off in here the last couple of days. That's because the dollar has seen a rebound. Let's go take a look at the dollar. So the dollar did get a rebound and trying to go in here, but you can see again this morning the dollar back weaker. Now the dollar has rebounded again here, but the dollar back weaker and dollar weakness can help gold higher in here, and we're seeing gold pop back higher. Yesterday's pattern you class this as a hammer pattern, right? So we had 2 down days and then a hammer, a down day, hammer pattern, and then pointing the market back higher. If we step into 15-minute chart in here, look, we're hovering, just hovering below these. The recent, you've got multiple highs in here on the 15-minute chart, all around 1857, 1858 really. And you've got these old peaks over here showing resistance at the same point here and here, okay? Down here now, again, I'd argue this is like double bottom pattern, yeah? You've got already double bottoms gone in, low here. You've got these multiple spike lows in here, 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 here. And then the market, so you'd say like, the real lows around here somewhere, market not spent much time below this area here, below 1841, 1840. And then you get double bottom, or triple bottom, quadruple bottom, whatever you want to call it, on the break here. And look, there's the break there through that peak there, that high there, 1854.7 in here. And you can see the market kind of defending that now as support. Old resistance in here that confirms the bottom, now acting as support. I think you just wait for the break. You've got an impulsive bar going on right now. I wouldn't pull the trigger right now. I'll probably wait just for the confirmation up through the highs, up through 1858, looking for, at least another $5 on this, maybe $10 to the upside, maybe not as much as 10, but certainly what we're jumping around in here at the moment on gold. High-low gold, a decent day can be, easy. Easy $10 to the upside. I can easily see this, breaking the highs and putting another $10 up, maybe up towards the peak in here. The recent peak is 1869. So maybe up to see 1870 today on the break of going back to that 15-minute chart, break through the highs, through 58, up towards the recent high up here. Yeah, so we could be up here 1869, 1870. So maybe another $10 on the upside on gold. Let's take a look at oil. Completely wiping out. I had this. We had this impulse high in here, been kind of negative whilst below that 112.39 peak there on that impulse bar there. We wiped that out yesterday and accelerated not only above the high, but now pushing into resistance from up here. See this big impulse candle here. This is all the way back from 9th of March. Get this big negative impulse candle. The high on that was 113.67. Up through that as well. So we're taking out resistances in here. A little bit hesitant at this peak here. That peak up there, 115.04. High yesterday was 114.83, 114.99 this morning. 114.99, 115.04. No surprises it's failed just at this kind of 115 round number, 115.04 level, and a slight setback. Is it bearish? I don't think so, really. If we go and step in here, you've seen this consolidation, new high, failure. Well, it is failing now, actually. I'm not. On a swing trade basis, you'd be buying the dip, right? On a day trade, I think it takes out the low. There's another dip. I think there's 2 trades in here. There's one down towards here. And I'm going to get rid of all this old analysis. Let me just actually, I'll make this a little big. I'm going to make it into a 30-minute chart and right size it here through here. So I do think there's a risk that we get a push down into this area here. Maybe this breakout, back to the breakout point up here, this high here, these highs here, you see, where the market was hesitant before. Remember my high there, yeah, that 112.39 level. Maybe going to get a pullback into there. So I think there's two trades. If you're trading very, very short term, probably looking at maybe a short in here down towards this kind of breakout level. If it gets back down to maybe this peak, maybe these peaks in here, back down towards the old highs, somewhere between 112.40, 112.00, I think there's a buy opportunity. So I think there's two trades. There's a short potential down towards there, and then there's a long if it gets down towards there, but waiting for the turn. Not going to buy it, not going to catch the knife, not going to buy it as it drops, waiting for it to drop into that zone, looking for it to hold these old resistances now as support, and then looking for it to turn from there and buying it as it swings back higher. So I think there's two trades in there. Right now, though, you'd have to say, I'm going to pin all the way into a 5-minute chart. Actually, it's holding this low. I mean, whilst holding that low, you could even venture along. If you want a real fast trade right now, you buy it right now, this second, and you have a stop below this low because it's just held this low. That's for a real quick flip trade for a bounce back into here. So there's a little buy opportunity in here right now, I think, with a very, very, very tight stop below this low. Stop below like 113.10. Okay. All right. Guys, I'm going to wrap it up there now. Bit of housekeeping. Just remember, guys, it's Memorial Day weekend in the USA this Monday. Okay. Markets closed today as normal. Let me just go and get the CME calendar. Holiday calendar. There it is. So let me bring the calendar up. Here we go. Memorial Day weekend. Where's the small one? Compact Excel. Here we go. Oh, I'm not sure if I'm going to be able to show this to you. No, it's not because I'm sharing this screen. Okay, what I can tell you is the market the futures market is open on Monday. Okay, I think you can trade through, but double checking here. I'm going to actually just open up what I just downloaded, but you won't be able to see it in here. And I don't want to switch my screen. Okay, so the market, I'm looking at it in here now. The market is open Sunday evening. And it opens Sunday evening for like stocks and most stuff in here opening Sunday evening at 1700 hours, 5 o'clock Central Time, okay, which is normal, okay, and then it's open until Monday. So the equity indices, for example, open till 12 o'clock Central Time, midday Central Time, and then doesn't reopen until then Monday again at 5 o'clock. So it's closed on Monday between 12 o'clock Central Time and 5 p.m. Central Time, okay? The more important thing I think I really want to mention in here, guys, is that the cash market, the actual stocks, the actual bond market as well, both of those are closed, okay? Now, given that the New York Stock Exchange is closed, it means it's going to be illiquid in the futures. Just be careful. The market could be really jumpy. European markets are open. If you do want to trade, but just be careful. You don't want to break any of our evaluation rules, okay? Because you've got an open position, okay, when the market closes. So just be careful, guys, right? My strong sentiment is don't trade. Close out anything before the market has that close at midday Central Time, and then don't reopen, or if you do reopen, make sure you're closing out again, yeah? Just be very, very careful out there. You don't want to fail the evaluation challenge. You don't want to get into any problems with liquidity. I would strongly say don't trade on Monday, US markets, okay? However, if you must, just be very, 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 very careful, okay? We've let you know, so don't say we haven't let you know, okay? So there you go. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. I'm also going to wish you all a fabulous weekend. I'll be back with you. Actually, we won't be back with you. That's the other thing to say, sorry. No webinar on Monday. It's a Memorial Day holiday. The market is kind of closed, pseudo closed, limited hours. There will be no webinar on Monday. We will be back with you. I think it's going to be James on Tuesday for the next Trade Day webinar. Have a great trading day. Stay safe until then, and have a great weekend too.